Okay, so I'll get. So good morning, everyone, and welcome to yet another session of SMS. Today is 8th of February, 2025. Last week we had the budget on 1st February. Today, CA Yogesh Harjaiji from Delhi, one of our very old members of the faculty group, he's going to share his insights about the changes that have been suggested in the budget 2025. So without more time from the deliberation, I would straight away hand over the mic to Yogeshji. Yogeshji, over to you.
Thank you, Arup sir, for having me this morning, and thank you everyone for joining. Actually, before we start with the session, I would humbly request everyone to please have a 1 minute silence in the loving memory of Safari Retreats. It was good till it lasted. I mean, but what possible good things could Safari Retreats had done which they did not do? I mean, I remember when we were kids, the teachers used to tell us कि बेटा बोर्ड पास कर लो तो फिर ऐश ही ऐश है, प्रोफेशनल डिग्री ग्रेजुएशन कर लो ऐश ही ऐश है, जॉब लग जाए एक बार तो ऐश ही ऐश है. तो आई गेस सफारी रिट्रीट्स डिड एवरी पॉसिबल थिंग एज अ गुड स्टूडेंट, but it will still end up paying the tax along with interest and possible penalty. And and what this judgment does, it's actually undermining the judicial decisions. This possible amendment. And it is not for the first time that we have seen this is happening. So there are interesting times ahead. I would say interesting times ahead. No matter how good you are with your case, you will still end up paying the taxes as per the wishes of the government, no matter how favorable judgments are, how the law is, whatever it is. So, sir, we'll start with our first amendment for today, 17.5, as we all know. The words plant or machinery has been changed to the words plant and machinery. In plant and machinery, we know has been defined under section 17.5. And they have also inserted an explanation that plant or machinery shall be construed and shall always be deemed to have construed as a reference to plant and machinery. So one fine day, the government comes up and says, oh, okay, this was a mistake. Now we want to correct the mistake. So there is an amendment. And Safari Retreats, after doing everything right, still end up paying for the taxes because government made a mistake while forming the law. And the most interesting thing is that this discussion was always going on, plant or machinery, plant and machinery, how it is different from plant and machinery, how we have to read plant or machinery. And that's what the court said. But I guess in the end, it was a mistake, a silly mistake. Well, going about the retrospective amendments, I was going through the law and I found actually 3 instances where government has given them power to make retrospective amendments. First is in section 11, where they provide exemption, where they can insert an explanation within 1 year and shall mean that it was always supposed to be there. Second was section 162, where they have the powers to make 164, sorry, where they have the powers to make the rules and where they have given them powers to make the rules retrospectively. And third was the new section 168A, under which all the timelines for adjudication was increased. Even there, they have the power to give a notification retrospectively. So these are the 3 sections where I could find powers to have the amendment retrospectively. And I guess this particular amendment does not fall into any of these 3. But still, there is an amendment which may be challenged. I don't know how much they will succeed. But in all, the good thing about this amendment was it was the advocates who gets to enjoy a lot. They get paid in the High Court, they get paid in the Supreme Court, and they'll still be getting paid if they challenge this amendment, retrospective amendment. But Safari Retreats and a taxpayer still ends up losing those. So as an advocate, we should be happy. At least we are getting paid for what we are doing. So I'll say it's in that respect a welcome amendment that at least we get to enjoy and we get to be paid in full. And I think the more we talk about it, the less it will be about the retrospective amendments, about safari retreats. And I really would like to have the views of House on this. I mean, how we perceive things going forward. So anyone would like to have their views?
I think it's a dangerous way of doing things, because now many people are saying that if the highest judiciary is taking a decision and then there are reversals, इसके बाद हाई कोर्ट में जाके फायदा क्या होगा regarding interpretation issues.
Absolutely. So you are not supposed to have your own interpretation. I mean, even the judiciary is not supposed to have their interpretation.
Yes.
It is only what favors the government. So that's a dangerous proposition that we are going into.
Venuji, I think Venuji wants to add.
Yeah. So I was just thinking on the impact of retrospective amendment. What if it was prospective or retrospective? It is only going to affect the cases where the notices have been served. But if there was no notice or order, like I'm looking at the people who have taken the credit but not utilized. It's still parked in the electronic credit ledger. It's there lying. And they have given that it is lying, and the matters were not taken for assessment. Till 2021, those people who have taken the credit not utilized can right royally utilize the credit, according to me. Even though this judgment is retrospective, till the financial year 2021, they can take they can utilize the credit if they have availed. If they have not availed, they lost the bus. But for those who have availed the credit, law is now telling that it is an ineligible credit. I agree. But to claim something is ineligible, they have to travel back in that period and make an assessment order. Demand has to be created for that period. And they cannot invoke 74 because the matter traveled from High Court to Supreme Court and the Act got amended retrospectively today. So, for utilizing a credit today, which is an ineligible credit, I don't think there is a legal bar. Someone today standing in 24-25 cannot comment that in 2021 you have taken a credit of immobile property. I just want to hear others' views on this.
So to some extent, I do agree on that. But the problem with department is they don't bother whether the case had traveled to the Supreme Court or the High Court. They still issue notice under 74. And you again have to go back to the courts to get that converted into 74.
Agreed. So when the question is, if they issue the notice under 74, I would not go on a merit saying that it is eligible or not. I would only contest whether 74 is applicable or not. I would only make my submission that this will not fit. It's like I will not even discuss anything on the case. I will say that this was a bona fide thing. So when I'm fighting on the 74, then it is a complete, like it has nothing to do with the safari retreat judgment or anything. I am agreeing it is an ineligible credit, but I am saying that the notice under which it is issued was not a right section. So isn't that plea good enough to fight?
Venuji.
Arpit bhai.
Venuji, in your example, you have said that the trade has been parked in the credit ledger and it has not been utilized.
Correct.
And therefore, since the time period for issuance of notice under Section 73 has gone, so if the department would be issuing notice under Section 74, they cannot issue.
Right.
But the point is that Section 73 and 74 uses the term availed or utilized.
Agreed.
So, one view which goes for 73 and 74 that if it has been availed, but the notice has not been issued, the notice can still be issued when it is been utilized.
Okay, so I would say the word utilized under Section 73 is limited to the extent where, let's say, restaurant where they are not eligible to take the credit and they have taken the credit and utilized. It is not blocked under Section 17(5), but it is blocked by way of rate notification. Or the real estate where they have to pay the taxes in cash, they have an eligible credit, but they have utilized the credit to make the payment of tax. I would say 73 utilization can only come there. They cannot question the utilization of the balance in the electronic credit ledger, because today, if there is a bank balance, you cannot say from which customer the money has come in. It is like it is a balance as in today. I don't know from which customer it has come in.
So then again, we are see. For me, if that would have been the case, they would have only stated availed, not stated availed or utilized. And secondly, if we are going back to the argument that this is a common pool and what has been utilized is not
Yeah.
known. So again, we are going back to the thing that since the ITC has been availed and utilized in the past period, so therefore you cannot issue me a notice. But in my opinion, if the credit has been parked and it is being utilized as of now, there is a good case for the department for going on to the fact that since it has been availed in the past period, but it is being utilized as of now, as per the submission of the taxpayer, we can still issue a notice under section 73 unless until we are able to prove that it was availed and both utilized in the past period for which the time period for 73 has gone.
Okay, so you are saying the 73 utilized can invoke every time, because my interpretation of utilized in 73 is only in a restrictive clause, not like can, because I always go with the bank balance as an example. You can never trace the closing balance can be articulated to which customer receipt.
So again, we
Right.
can say that it was utilized in the past. Why to say that it has not been utilized?
Yeah, so there would still be a cases where the credits utilized is not still sufficient enough to cover. But yes, I would still get your point, but I would still take the primary argument first. Yeah.
But sir,
Yes.
Arpit sir, wouldn't this give a bigger power to the department? I mean, for a credit that was availed in, let's say 17-18 and utilized in 23-24. So they'll be issuing the notice for the invoice that was in 17-18, but because it was utilized in 23-24. So, and how they are going to map it, I don't know. Will they
So
actually be
Yogesh,
able to
that's
map
why
it?
I say that always I would prefer an argument that it was availed and utilized at that point of time only.
But again, that this would actually give a bigger power. Means the
Yes,
case that
the
was
law has been
supposed
so
to be done in
drafted.
17-18 can be done in 23-24 also.
It has been so drafted that availed or utilized both, because if utilization would not have been relevant, because every utilization is preceded by availment. So if they would have not intended to cover the utilization part, they would have simply stated that ITC which has been wrongly availed rather than availed or utilized.
Going to the next amendment, just opposite to this amendment, I would say another retrospective. You will see in Schedule 3, a clause in para 8, clause AA has been added, where the supply takes place within the SEZ, within the free trade warehousing zone. That supply has been has been added to Schedule 3 now. So it will neither be a supply of goods nor be a supply of services, and that has been added retrospectively. To that extent, it is beneficial for the supplier, for the registered person. But another important thing that goes with it is the clause 129 of our finance bill 2025. I'll just move on to that. Now, reading that amendment, that supply from SEZ to within SEZ and within free trade warehousing zone is now part of Schedule 3, will not be a supply of goods, nor be a supply of services, and that too retrospectively. But then comes the clause 129, that no refund shall be made of all such tax which has been collected, but which would not have been collected at section 128 in force at all material times. So if any person who has paid tax on any such transaction cannot now avail the refund of that transaction, saying it has been added retrospectively and that was never supposed to be a supply of goods or supply of services. Now, how contrary these two amendments are: one, which you are benefiting the government, they are amending it retrospectively, but they will be demanding the tax. Another, which is favoring the assessee, which is favoring the registered persons, the taxable persons, and they are saying will not allow you to get the refund back, will not return you the money. So just the two extremes of the amendments, which one of which is favoring the government, one of which is favoring the taxpayers. You don't get the refund, but they get the right to seek the amount of tax that you have maybe availed and utilized, although correctly, but now incorrectly. So how these two things match? I fail to understand. Why are there two different parameters to be done in the same law? So that is something difficult to understand. I hope I'm able to get through with the things that I want to say, that how these two things are similar yet different.
Veto power.
Pardon, sir?
Veto power, eh?
So that at the end of the day, this is all about the veto power, not about the law, I guess. Next, sir, we move to what I would say a business prospect for the professionals and a new name to our Inspector Raj track and trace mechanism. Section 148A, a new section has been inserted. They say they're going to track and trace certain goods. That I believe is certainly going to encourage the Inspector Raj, and not only that is going to encourage the Inspector Raj, but it will add to more compliances and more involvement of professionals in this. Just let us just read through the section first. What this says, the government may, on the recommendation of council by notification, specify the goods. So they'll specify the goods on which this particular section will be applicable. This track and trace mechanism will be applicable. Persons or class of persons who are in possession or deal with such goods. They will specify the persons or class of persons who are in possession or deal with such goods. So dealing with such goods, we get manufacturer, we get dealers, but person who are in possession, now that may include also the warehouse where the goods are being stored, the transporter who is doing the logistic work. They actually do not have anything to do with these goods, but they are in possession of the goods till the time they are being stored, till the time they are being transported. So even those persons may get included and will have to face the repercussion of this section if it's not being followed. So what they have to do, the government may, in respect of the goods referred to in clause A, provide a system for enabling affixation of unique identification mark. A unique identification marking. They have defined a unique identification marking also. We'll get to that once we are done with it. So they will provide a system for enabling a fixation of unique identification mark that will have to be a unique and non-removable. And for making electronic storage and access of such information. So not only there will be a system, but there will be an electronic storage. Either it will be on a GST portal, or they might provide a separate portal or a third-party portal for storing these information for access at any time by the government officials, by the department. Prescribe the unique identification marking. They may also prescribe the marking, that this is the marking that you have to do on such goods, including the information to be recorded therein. And the person referred to in subsection 1 shall affix on said goods or packages. So goods or packages. So it means it may be prescribed for the entire package, or it may be prescribed for even each and every good that is being dealt with. So not only the package, but also they may have to do it on every single piece of item that the government may prescribe. So again, I don't know how practically it would be possible to mark each and every good instead of packaging, particularly if they're small goods to be dealt with. Furnish such information and details within such time and manner, such records or documents in such form and manner. So as I was saying, more involvement of professionals and more business. So there is one more return added to our bouquet of returns that needs to be filed with the department. The records of all such unique identification marking, not only the goods, but also the machinery. Furnish details of machinery installed in place of business of manufacture of such goods, including the identification, capacity, duration of operations, and such other details of operation which within such time and in such form and manner. Last, the most interesting part, pay such amount in relation to the system referred to in subsection 2. Not only they are providing us the system to keep our information, but they also want money from us for maintaining this portal. Now, I get back to the old days when, goons used to attack on the businessmen, particularly in Northeast areas and Naxal areas. You give us the protection money. Protection money for what? From whom you are protecting us? We are protecting us from us. We are protecting you from us. So that's what the government is saying. Give us the money so that we may keep the information that you provided so that we can use this information to nail you in the future. Now, how interesting is that I'll be paying for the money. I'll paying the money to the government for maintaining a record which can in future be used against me. And in what ways we don't know. So coming to this, how practically possible is this section to be implemented, to be executed? And what additional revenue that government is actually planning to earn with this? One you are talking about ease of doing business, and then you keep such mechanism that only encourages the Inspector Raj. I fail to understand how these three things they coordinate with each other, they collab with each other to actually move on to an ease of doing business environment. And I mean, what additional tax the government is actually aiming, or is it worth it to put such a mechanism in place and to have such a machinery involved, the officers involved, everyone involved to keep and check on such a thing, which only to some extent will encourage harassment. I fail to understand. And then you are asking the taxpayer to you pay for the information, to pay for the system that we are keeping to maintain such information. And that I suppose will be in addition to a tax we will pay. So this is something very interesting, a new provision. And if you don't follow this provision, there is a penalty, a new provision, section 122B has been inserted, which will to impose penalty of 1 lakh and 10% of the amount involved, whichever is higher. And that penalty will not only be on the persons who are dealing with this, dealing in such goods, but also who are in possession, as we talked about initially, the warehouse keepers, the transporters, even they may be involved. The entire net, the entire chain involved from the manufacturing till the last sale of these goods, or until these goods are eventually consumed in manufacturing of some other goods. The entire chain involved will be under the bracket of ensuring that these marking has been done, has been maintained, records have been properly maintained. If not maintained, all of them come under the bracket of under the threat of imposing the penalty. So this is something very interesting that is going to come forward, which again will involve professionals to a huge extent, because fixing this unique identification number will be a task. Then filing information from time to time will again involve professionals. So how this actually goes with the bigger goal, I am not sure. So I'll actually would like to have house views how we achieve a bigger goal on this. I guess we are actually going back to the Inspector Raj and actually discouraging the businessmen to do a business in a proper way, instead of making it easy to allow them to do business in an easier way, which will automatically lead to the more collection of taxes. So this is something that needs to be checked. I'll like to welcome the house views on this one. This is very interesting provision that has been introduced.
Do we have any guesses on the commodities? What are the goods that are going to have this implication?
Ma'am, pan masala for first.
Correct.
And then I guess the metal scrap on which they have recently introduced the TDS provisions.
Correct. It's basically to curb or have some control mechanism on these in goods.
Yeah.
Okay. So then how do we say that, tax Raj and just to restrict the trade or in something of that sort? Because
but ma'am, even if it's on a single commodity, that does put an additional burden. on the taxpayers to have such mechanism. They might or might not specify other goods, but even if they have specified one or two goods, that will still lead to some sort of burden on the taxpayers, and which will affect the entire chain involved.
Yogesh, this is Annapurna here. Sir, this was a kind of system which was internally inbuilt in the system, department itself. Like they have a track record of the goods where they are able to see that there is a lot of evasion of taxes, or there are a lot of bill trading which is happening around. So based on that, they are going to notify the goods and they are going to notify the class of person. So
Yes.
overall, I think they are going to select a few kind of commodities where they are able to see that there is a tax evasion, and based on this, they are bringing out through the 148A. But what is my issue is it going to notify the goods? That is what we are understanding, but I'm not able to understand how they are going to notify the class of person. Are they going to add the warehouses or the persons who are involved in those transactions, or how? I'm not able to understand class of person. But the goods was there even under the erstwhile regime also, where it was not called as track and trace system, but inbuilt they had a control where, like for plywood, steel, scrap, all that, they had a specific controls to understand the transaction. So I think something they are going to bring out here, but we have to understand what kind of class of persons they are going to add. That is what the question which is open today actually.
Even in case of goods, even though the internal system was there, but now they are requiring the taxable person, the registered person, to not only maintain the record but also to furnish the statements and returns in this regard, and also to pay for the mechanism. That is something I believe is interesting, to pay for that mechanism. They have their internal systems, all right, they want the information, all right, but it is the taxpayer who has to pay for that system also. Now, coming to the persons and a class of persons. So the class of person we see who are in the possession and deal with such goods. So I guess manufacturer will definitely be one person who will be there. And I also believe the warehouses will be there. I strongly feel even the warehouses will be there, because many times you see these goods are being illegally kept out from the records, though they are maintained in the warehouses. When they raid the warehouses, they see the goods that are being kept there. They seal the factory. They impose penalty on the persons who has that property, even though he's not the owner of the good, but he's the person who has given the property on rent. So even to ensure the control at the lowest possible level, I have the feeling that they are going to include the warehouses also, at that they should ensure that there is a unique identification mark that is available on the goods which are being stored in their premises. And rest all what they are going to include, we'll have to wait for that. But manufacturer and the warehouse keeper, these are the two persons I believe that are going to be there.
Yes. We have something information written also, which is not yet notified. Like that form is not there. Something called as information written under 150. So something they are going to take that as a information written to collect the information, or whether they are going to come out with a separate form to collect information. I think we have to wait and see, like how they are going to come out, because they are saying furnish such
I don't think
information.
this is linked with 150, no, madam.
I think no, because see, I think they will come out with a different form, because what they are saying is furnish such information and details within such time and maintain such records in such form and manner. So
So this
I
is
don't.
independent of 150 is what I'm saying.
Okay. Because here also they are asking the information. So that is also something they require the information from a specified, including a taxable person. So I was just trying to see whether they are going to use the same form or they are going to come out with a different form for track and trace system.
But I believe there'll be a different form. They have mentioned in the section itself, section 3, if you see clause B.
Yeah, in such form and manner they are
In
saying.
such form and manner. And even in C, the details of machinery, they are saying in such form and manner. So maybe there'll be a combined form for these two. The one is for the goods, information of goods, and the part B for the information of the machinery and the capital goods that have been installed.
At
But
this point, I have one clarification. Now I am seeing notices where, good e-way bill is, linked to the input tax credit availed, and they are saying that the e-way bill number they had asked for all the input tax credit, whatever we have taken. And they said that for these, the e-way bill did not have any movement. So even they, with the current e-way bill system itself, they are able to track whether there was movement or not, and that much of tracking is already happening. With that, I don't know why another, this section will, how it will give more information to them.
Ma'am, actually, this is to just have more control on certain specified goods. I mean, e-way bills are being generated in huge numbers for all the goods, and they have a monetary limit. Here, they do not have any monetary limit. Even the smallest of the bills, every time there's a movement of goods, they will be able to track it irrespective of the value. And then secondly, they want to have more control, I believe, on certain specified goods that we so far as presuming will be like pan masala or the metal scrap. So I guess just to have more control on these goods.
Right.
And then there's a specific information that they've been asking for details of machineries, the capital goods have been installed, what is their capacity, how much, what is the duration of operation, how much hours is it working. So not only it goes to the goods, but also the hours of operation, where they'll be again linking it with, I believe, will be the electricity bill. How much the bill is being, how much is the electricity bill, and then comparing it with the production, that how much it is it being produced. So they'll probably have an idea that if the machine has said run for 12 hours, 15 hours, then how much production is supposed to have depending upon its capacity. So it is more about having a lot more control over the specified goods than as compared to general goods. So anyone who would like to add anything to this, or we might move to next one.
So, before you complete, I only feel that this is going to add a compliance burden to small people. Though
Absolutely.
they're talking about the pan, gutka, metal scrap, 90% of the population in this category are small composition traders. Only 10% are very large scale, and they do 90% of the business. But now when they're imposing this, though they're imposing for those 10% of the people, 90% of them are unorganized, who doesn't even maintain any books of accounts. And most of them happily fit themselves under composition scheme or sub-registration thing. There is going to be a challenge is what I feel.
And another thing I feel, if we see subsection 3, the person referred to in subsection 1. Now in subsection 1, we are not only talking about the manufacturer, we are also talking about the warehouse keepers, maybe the dealers, maybe the transporters. So who exactly will be required to furnish this information will, again, only time will tell. But
yeah,
how they are going to distinguish that manufacturer has to file this detail and then warehouse keeper has to file the detail, maybe they'll reconcile, or maybe only one of the person is required to file the return. So I get additional burden on the persons who are not actually dealing in such goods, but are in possession of these goods.
And also the penalties, which is already there in 129, huge penalties are there for that. In addition to that, they are also adding this 122.
This 122B is,
it will
yes,
be
ma'am.
again a double zero credit actually. If you look the kind of penalty they have added. So it is saying like 1 lakh rupees or 10% of the tax payable. So whichever is higher. So this will be in addition to any penalty they have added here.
Yes, ma'am. Yes, ma'am. This is in addition to
burden. Yeah, that is also an additional burden.
So there is a minimum penalty of 1 lakh rupees if you are not complying with this. Sir, moving to the next amendment to section 107 and 112. Now, when the 55th GST Council meeting was held, they said that the proviso to section 127, proviso to section 107 subsection 6 will be amended, and 25% will be changed to 10%. So when I actually looked at the provision, and that was applicable to only section 129(3), and the first thing that came to my mind that what difference that is actually made. Be it 25%, be it 10%, be it 5%, be it 50%. Anyways, the provision was not practically applicable. You are always paying the 100% of the amount, that is 200% of the tax as penalty. Only then you are able to get your vehicle released and complete the supply. So what difference would it have made at 25%, 10%? Now, when the amendment has finally arrived and finally come, they have actually changed the entire provision, and now there will be a pre-deposit for each and every penalty order. Not only section 129, but for every penalty order, there will be a pre-deposit of 10% equivalent to the 10% of the amount of the penalty. Another thing they have said that it is for the order demanding only penalty and not involving any tax. So, although I have not practically seen any such case, but let us take a hypothetical example. If we get a notice under section 73 or say 74, where we have already paid the taxes, and then a final order, the order says, okay, you have paid the taxes, we are not raising demand of taxes, we are raising demand only for the penalty that you have not paid and the interest maybe you have not paid. So will this proviso be applicable in that case also, or we are only talking about the general penalty, the section 122, 122A, 122B penalty? That is something that I was actually wondering upon.
For circular trading cases, so the party B will only be paying penalty and no taxes, no ITC reversal.
So if we get any notice under section 73 or 74 and eventual order is only for penalty, then this will not be applicable. We can still proceed without filing the...
No, I think this would be applicable. No, it will be only all those cases where there is
all
only
those cases.
penalty.
Although practically what I have seen, even in the notices, even in the final orders for 73, they do specify that amount of tax. Then if you have already paid the tax, they add a para that the amount that this has been paid is stand adjusted, and then this is the remaining that you have to pay.
Even 127 also they can issue the penalty, no? Like based on that. So only penalty order they can pass.
Only penalty orders.
So in
Only
that case, I
penalty
think this can be applicable.
So this is yes, ma'am. This is something new that now even so till this amendment actually gets notified, we still have time if anyone has the order of penalty to file the appeal as quickly as possible. Once this get into action, becomes part of the act, an additional 10% will be required to be paid for filing the first appeal. And
So
then for second appeal, yes, sir.
Yogesh, this is Gaurav from Ahmedabad. I have
Yes,
an
sir.
instance wherein a particular order for a financial year was passed, which had only demand for tax.
So your voice is
And
cracking,
then
sir. Not
3
able
months
to get
later, they
anything.
said that since you have not paid.
Sir, your voice was cracking. Can you please repeat that question?
Sir, I have an instance wherein a particular order was issued for demand of tax, and then 3 months later, another order was issued that since you have not paid this tax within a period of 30 days, now we are levying penalty of the 10%. So there is a separate order altogether, DRC 7. So will that also be covered here by this new provision?
That will be covered, sir. It's a separate order demanding only penalty.
But it is linked to the original demand. I mean, there was a
But sir,
separate
there
demand.
is still it is a separate order. It is still a separate order.
Okay.
It is not an addition to that order. It is still a separate order. Maybe linking it to the previous one, but it's still a separate order.
Got it, sir.
And even in the tribunal stage, we'll have to pay 10% addition to the 10% that we had earlier paid, the total 20% for filing an appeal with the tribunal in case of penalty orders that we are talking about.
So here, one point which I have is the cases which are under hand. I am thinking that it will at least take next 6 months for this to get affected. Because
Yes,
all
sir.
GST laws to get updated, and then the section would be notified. So
Yes,
maybe
yes,
by
sir.
August, if we file all those appeals, then there will not be any pre-deposit for penalty. But when we come to tribunal, then we end up paying 20% there. Because we skipped the original 10%. Just affirmative confirmation of the thought.
Yes, sir. That will be that. At the time of tribunal, it says 10% in addition to the amount payable under proviso to subsection 6.
Correct.
But I don't know how. But can we say that when the appeal was filed with the first authority, there was no amount actually payable? Or we have to go by the current law that now because it is payable, maybe it was not payable at that time.
Yeah,
But
I
now
like
is
I
it
was in a
payable?
dual mind, so that's why I just kept the thought here.
Yeah,
I
yeah.
was thinking that 20% lagega, but let the others hear.
But in addition to the amount payable, but when I filed the appeal, it was not payable. So I believe I can take the stand that when I filed the appeal, it was not payable.
Yeah, true. I get that point. Yeah.
So, sir, please, views of the house are welcome on this
One
point. I
more
think it's a very good
one more
point.
point with this, sir. One more point is, like few of the orders have a few issues with tax and penalty, and few issues are only they are levying the penalties. So in those scenarios, should I be required to pay the 10% of that penalty? I was reading Arpit sir issue or somebody was sharing on this. So is it like should we deposit the 10% of that penalty on that issue, or is it enough? It will suffice that I have to pay only 10% of the tax, because there are two issues. And sometimes we contend that for the same offense, there should not be multiple penalties. That is fine. That is our contention. But the issue is when we are going to file an appeal, is it that 10% of that penalty has to be taken as a pre-deposit, or the whole order should be only a penalty-based order? So that is also one.
The whole order has to be the
Full
penalty
order,
order.
according to me, also.
The order demanding penalty without involving demand of any tax.
Okay.
If there is no tax involved, then there is only only penalty involved. You have to deposit 10% of the penalty amount. But when we talk about the entire order where there is tax, where there is interest, where there is penalty, in that case, 10% of only tax amount is required to be deposited. And in that case, there is no 10% of penalty is required to be deposited.
And few orders are only with interest and penalty. I think those will suffice, right? Or only penalty.
Those will suffice. They
Interest
are
and
demanding penalty and they don't have any involvement of any tax.
But interest is there. I think that will suffice.
That will suffice. That will suffice.
Yeah.
Although when we started, I said practically I have not actually seen any 73 notice not demanding tax. They do demand tax. The order, they do demand tax. Then they in the last para they say, okay, this tax has actually been paid and now stand adjusted. But they eventually they do demand the tax amount.
Actually, they
So
have to
far, what I
bring
have seen here in
out
Delhi.
demand of any tax or interest they have to bring out here, so that it is very clear that it is purely penalty-based order actually.
So far, it is tax, ma'am. If it is interest and penalty, they
No,
will
not.
they will fall on this.
I am
Yeah,
saying
yeah.
without involving demand of any tax or interest.
No, so far it is only tax, but that's what we have to read into. Sir, any views on that 20% or 10% penalty to the with the appellate tribunal, the pre-deposit?
Maybe you proceed, sir.
Okay, then we move forward to other amendments, section 38 and section 39. Now the section 38 talks about GSTR 2B, an auto-generated statement based on the output supplies reported by recipient. Now they say the word auto-generated will be omitted. The word statement will be there. Now why auto-generated will be removed? Because now they have IMS in place. Now the department says you are the only one who are approving the invoices and IMS. And once you approve the invoices, these are the invoices that generated in GSTR 2B. Even if you're not actually taking any action, they are deemed approved and then the 2B gets generated. So it is no more auto-generated. It is now the taxpayer himself who is generating GSTR 2B. I don't know how IMS makes any difference. It's still the invoices that are there available on the portal, and it may or may not include the invoices that I have. So, but it is no more auto-generated. You cannot add anything to it, but it is not auto-generated. So once the statement GSTR2B, which you have yourself generated, that will be made available, based on which you will be able to take your credit. And then section 39, which initially said that return will be filed within such time, and now it adds subject to conditions and restrictions. So first the IMS, which still I don't believe have any statute backing. I don't know if I still am not able to find any statute backing, but now IMS is being made formal indirectly by saying that it is the taxpayer who generates the GSTR2B, and based on that you will get your credit subject to, and you will file the return subject to conditions and restrictions. So we are actually gradually moving towards the GSTR3B locking system. Now how it coincide with the self-assessment process, that there is again one thing to ponder about. I guess Venu sir wants to say something. Yes, Venu sir.
So if the word auto-generated statement is there, as you rightly said, the department is now going to get into another legal battle, because GSTR2B is an auto-generated statement. With the IMS coming in, even though the credit is there in GSTR2B, and right now they made it as IMS optional, so I do nothing, the deemed it will get accepted. But what actually goes to the IMS is only which I have accepted. All those which have kept pending or rejected is not into my credit now. Earlier, this would have been a situation where I would have got a full credit. So with IMS coming into the place, they had to remove this word auto-generated, because on 13th midnight or 14th morning when 2B is generated, it was at 100 rupees. But on 20th when I was filing, my 2B is now with 80 rupees. So that's the reason this change.
Yes, sir. Yes, but again, what we are going into, that it is not going to be a self-assessment anymore as far as input tax credit is concerned. You still have control of over your sales reporting.
See, I can never take more credit. So they are only giving option to reduce the credit.
Reduce the credit. They're only giving the option to reduce the credit.
Yeah.
And another change in clause B, where they have included, where they added the word including. Details of supply in respect of which such credit cannot be availed, whether wholly or partly, by the recipient, including on account of details of such supplies. So when I first read the word included, when we go to the memorandum explaining the finance bill, it says the words including has been added to make the provision more inclusive. So when you read more inclusive, you tend to get excited. Okay, something better is coming, but it is inclusive in rejecting your credit. It is including what cannot be availed, or what is not availed by the taxpayers. So again, it is including, but this including is actually restricting the recipient from taking any credit. So again, the very smart inclusive provision, I would say. And then 139, subject to such conditions and restrictions, as we were talking about, how it is going to remain a self-assessment anymore, or the concept of self-assessment is only going to be a theoretical concept going forward. So, and if this concept is going to be a theoretical concept going forward, how 74 or going forward 74A would apply? I mean, that will now be limited, I believe, to the bogus invoicing. I really don't see any other way how 74A comes into picture, even during the audits time. Now we see the notices being issued under section 74 even at the time of audit. So how this is going to remain in action when self-assessment is no more an option, at least not practically. So that will be another interesting thing to see going forward, how they are going to allege frauds in cases other than involving bogus invoicing. Next amendment, sir, is in the ISD. input service distributor, there's a whole a different kind of the process, the litigation that's going to come going forward with 1st April 2025 when ISD becomes mandatory. Then you have to find out each and every situation whether the IST is to be made or cross charge is to be made. So keeping that aside for the moment. Now, when the amendment was made previously in last year, they added words 9394 to enable the ISD to pay the tax to distribute the tax which is paid on reverse charge basis. But that was only with respect to intrastate, as section 9.3, section 9.4 was added. Now they realized it. They made it. They realized their mistake that they have missed. Now they have added 5.3 and 5.4. Now the text with now the I beg your pardon. Now the ISD can distribute the tax which is being paid on RCM basis on interstate sales also. So again, this is more clarificatory than anything else. 9394 was added last year. They have now inserted 5.3 and 5.4. But to understand the whole mechanism, we actually might need an ISD cross charge session once again before we get to 1st April 2025. Now, this is unique identification marking that we were talking about that is to be put. It means a unique identification marking referred to in clause B, subsection 2 of section 148A, and includes a digital stamp, digital mark, or any other similar marking, which is unique, secure, and non-removable. Yes, Venu sir.
Yeah, so ISD, there's one question I have is when the inclusion of 9.3 and 9.4 payment and from intrastate they have included interstate. But the question is still ISD cannot make any cash payment in GSTR 6. So when ISD is unable to make cash payment, what is it they are amending in this? I still did not get the point. Like why they are making this point when ISD cannot make any payment for 9394, or are they intending to change the GST returns? If someone, Gurjit sir is there, if the Gurjit sir can add some point to it. Because because 20 subsection 2 also uses the word that the payment is made by the distinct person. So
but sir, there is one more point. Can technically ISD, even if we assume for a moment that they can pay tax in cash, but can they actually pay the tax on reverse charge basis? Because they are never the actual recipient. And it is the recipient who has to pay this tax on reverse charge basis. So one question also comes to mind, that can ISD actually pay the tax on reverse charge basis? So as per section 9394 and 5354.
So why at all these things are coming, I have no clue. And if they say the distinct person is paying towards 9394 and then passing it over to ISD, there is no mechanism in the law to establish that I have paid reverse charge, but the credit has been taken by the ISD. Unless then again, I have to, on a forward charge basis, I have to raise invoice from my GST to ISD GST number, which otherwise
actually
has the current mechanism to take credit of all the forward charge invoices coming in.
But what actually they have done, they have also amended in section 20. So what they say now, ISD can distribute the credit, including the credit for which the tax was paid on reverse charge basis by any distinct person.
Agreed.
So,
but where is the mechanism to trace? Abhi, let's say I am in head office Bangalore and ISD is in Kolkata.
yes,
I
sir.
am making the payment here. Kolkata is distributing. So I have offices across India. How will an officer can check which is the ISD which is the distinct person who has distributed that credit to that ISD? Oh, mechanism.
So that's where I guess the new mechanism comes in, that the person who has received those invoices, see the head office in your case, will transfer this credit to the ISD, and then ISD can distribute the credit to the respective states and branches.
No one knows. The mechanism of transfer is unclear to me.
Yeah, that still remains unclear. I think I have one rule 46A. it's been inserted to mention the document based on which that ISD, this reverse charge mechanism credit can be distributed. Just a second, I'll just write it once.
46A is this one in bill of supply come this. ISD ka to.
Vinuji, I think that the mechanism will surely come because the amendment is very clear, and what they have done is that previously they had not covered the interstate supplies for payment of RCM. Now they have covered. Previously they have only covered the intrastate supply.
Correct.
So
That I agree.
they might be coming across cases wherein ISD would have been receiving the services but not paying the RCM, thereby avoiding the payment of RCM.
Yeah, so that is where I want if someone from GST.
Venuji, this is Gaurav from Ahmedabad. There is an amended rule 54(1)A which will take care of this, I believe.
Sir, we have to look at what is the problem, where it emanates from, in my view. It is not GSTN's view I'm sharing. The problem was that, say, invoices are being raised against ISD. If some invoice is raised by a supplier where the supplier says that I'm not liable to pay, it is a recipient who is liable to pay the RCM. So in that case, can that invoice be raised against GSTIN, which is the GSTIN for an ISD? That becomes an issue. Yeah, we are understanding correctly that as of now, GSTR 6 does not have any mechanism to pay the liabilities, etc. So, but the issue was emanating from that side, that there could be instances where the invoices are raised against ISD, but in those cases, the goods or services, they are liable to RCM to be paid by the recipient. Now, the actual recipients, since those services may involve a large number of registered taxpayers, so what would be the option? Either to raise that for each individual service recipient, the supplier would be, it would be very difficult for the supplier to do so. So a mechanism is being brought in. What we can feel from this, the further changes, of course, would be there by the time it comes into it, that the ISD itself.
Guruji sir, आपकी voice चली गई है. I am not able to hear. I don't know this.
Then sir, your question is why 5354 inserted? Is it
No,
right?
no, I'm not saying it should be inserted when 9394 is there, 5354 should be there. That's not my question. My question
So,
is.
sir, yes, sir.
how to
So, when you, sir, these mechanisms, of course, when the RCM has to be paid and credit, what the provisions seem to say is that the credit for RCM can also be distributed by ISD. So that means the RCM would be paid by ISD and then only then distributed. They are going to distribute credit only. So that
Correct.
means there would some mechanism would come up whereby the ISDs would be able to discharge that liability.
Okay, so most likely GSTR 6 will also have a facility to make.
Yeah, that is what we can conceive now. No? That would be that is how the purpose of this thing would come into, no? All this.
Otherwise, then this provision will be irrelevant.
Yeah.
No,
Venu sir, this is Gaurav from Ahmedabad. If you take a look at the amended rule 54(1)A, that is what says that wherever there is a liability to pay RCM, the distinct person, the non-ISD TIN number, will pay that RCM and transfer it to the ISD for onward distribution.
How?
That is what rule 54(1)A says. They'll have to raise an invoice on the ISD. And then ISD will avail that ITC and then distribute it further.
20 subsection 2 also says the same. The payment will be done by distinct person. But how the payment made by one person comes to the ledger of the ISD and how is that distributed? I'm saying the link of that is missing. Like as Guruji sir is saying that maybe ISD will be allowed to make the payment. But 20 subsection 2 says, as you said, the new rule 54A is saying the same. I agree. But the
54(1)A.
Sir, currently also there was a problem that in quite a few cases. There were cases where instead of the invoices being raised against ISD, the invoices were raised against some distinct person. And then this distinct person is raising invoice against the GSTIN of the ISD. So maybe that would follow. So we'll have to see, wait for the how the things turn out.
Yeah, Guruji sir, so if you're saying that the ISD, the reverse charge is paid by the distinct person and he is raising an invoice
And
to ISD, then
yes,
for the ISD, this has become like a forward charge receipt. It is now no longer
yes,
9394 receipt.
yes.
So technically,
Yeah.
then that way, I don't need to have any of this at all in the ISD. I'm saying some.
Yes. Something will come. I think we'll have to wait for that. How
Exactly,
these
correct.
and it is like say in the the finance bill which we are reading, we are just reading the provisions. If we read it together with all the relevant rules and the act and the amended section with the words inserted into that, then it will try to make more sense. I think we'll have to take an effort, like Yogesh was saying, that we may need a separate session for cross charge and ISD. With these new words being inserted into the section and whatever the relevant rules are already there, then trying to make some sense of it, that will give more relevant meaning to all of us to understand it.
So, with this, moving to next, section 12, subsection 4, section 13, subsection 4 are being omitted that related to the time of supply for tax on vouchers. Since vouchers are no more subject to tax, these provisions had become redundant. So they have removed these provisions. Unique identification marking, as we were reading, it includes the digital stamp, digital mark, any similar marking which is unique, secure, and non-removable. So the thing is, it has to be unique, secure, of course, and non-removable. If it should not be, cannot be removed, I believe, cannot be a sticker or cannot be in ink or writing. It has to be probably carved in of that either package or the goods to ensure that it is non-removable. Then there is a small amendment where they have defined local fund and municipal fund in section 2, subsection 69. Local fund means fund under the control of management of an authority of local self-government establishing for discharging civic function in relation to a panchayat area. So maybe they are referring to a panchayat, a village panchayat. And next one is the municipal fund. Means a fund under the control or management of an authority, local self-government established for discharging civic functions of in relation to metropolitan area or municipal area, the municipal authority that we all know. And then there is amendment to again that 5.3 and 5.4 has been added with the 9.3 and 9.4 in ISD. So, and ISD, as we discussed, it is going to be a long topic, a lengthy topic, and something that we will have to ponder maybe not one but multiple times to understand how exactly this is going to function, and so that we are able to even distinguish the transaction and situations where ISD would be applicable and where cross charge would be applicable. Amendation of ISD does not mean that the cross charge will not longer be there. They are going to be there. They are going to be in existence simultaneously. So it is now again another, I guess, added burden on the businesses to ensure which transaction they have to use the ISD mechanism. They have to mandatorily now take the ISD registration, and on what mechanism they have to go for the cross charge. With this, sir, I guess we are almost done with the time, and we have, I think, covered almost all the provisions for the amendment for the budget. I guess we have. So anything that House would like to add to this?
I guess that's all. And thank you, Yogesh bhai. It was a great meeting in WOFA, and such a short notice you have accepted to take the session. But still, we
Thank
will
you, sir. My honor.
take one session on ISD versus cross charge. Which you have for us, that's your favorite topic. You are our go-to speaker for that topic.
Yes, sir.
And again, friends, every Saturday morning we strive to have the session. This time I met all the PA faculty members. I have taken dates for the upcoming sessions. So request, just intimate others to join on Saturday morning, and also make sure you schedule in your calendar to be present in Saturday morning, and let's have this kind of very fruitful, detailed discussions. Like I'm sure everyone have done the budget thing, but adding no interactive to thing, when we go back and speak to others in the podium, we can also impress upon, okay, these are the challenges that are going to come. So at least this faculty group, when we are going out and not just on the stage, but interacting with others, we need to ensure there is a lot of quality discussion, so that even the officers who are passing the order, they have to pass a meaningful order and speaking orders, speaking notices. That is the strive at which we should go, rather than getting the matter be closed somehow. On this note, finally, thank you, Yogesh ji, again. We will meet
Thank you, sir.
next Saturday. Thank you all. Good day.